Hi, welcome back to the channel. This video is a quick update on the situation in Russia relating to the Ukraine crisis. As you may be aware, a number of sanctions have been brought in by most of the Western world against the Russian authorities. And the two big ones that have been announced recently are that some of the Russian institutions will now be banned from the international payment system called SWIFT. And SWIFT is used by most companies and countries around the world to make payments for imports and exports and investments. So that ban will hurt the Russian economy very badly. But the bigger issue is that all of the assets that the Russian central bank has overseas have now been frozen. So they have over 630 billion of assets all around the world, and they include investments in stock markets and government bonds and various other forms of investment vehicles, and also cash. So that cash is sitting in banks all across the globe. And the moves that have just been brought in will prevent the Russian authorities from accessing both the cash and those investments. Now, the main impact on Russia is that they would normally use these reserves to support the value of the Russian ruble. And as soon as all of these sanctions were announced, the ruble has crashed. So we've seen the ruble fall by 30% in one day. Now that's a devastating blow for the Russian economy. So the Russian authorities have today taken some action to counter the impact of that massive fall in the ruble. And I wanted to post this video just to update everybody, to make sure that you're aware of the three main policies that they brought in today. So I'll go through it in this video in some detail. But basically they have hiked interest rates from 9.5% to 20%. 20%. So an enormous jump in interest rates. They've also instructed all of their exporting companies to hand over 80% of all of their foreign currency. Now, we recently saw a similar move by the Turkish authorities, where they asked all companies in Turkey to hand over 25%, but the Russians have gone for 80%, which is a massive figure. And they've also instructed all of their financial institutions to stop taking any short orders. So nobody is now allowed to short any stocks or currencies or any other form of assets. And they've also told all the brokers in the country to stop allowing any sell instructions from overseas institutions. So we'll go through all of these measures in some detail in this video, but I wanted to post it because I think it shows the crisis level that we're seeing within Russia right now, and this is likely to get a lot worse as this conflict continues and the pressure starts to mount on Russia. So in response to the sanctions and all of the issues that are going on with regards to the Russian ruble, the authorities in Russia have increased interest rates from 9.5% to 20%. So this is a massive hike. This is a scale not seen in any country in recent times. An increase of over 10.5% overnight is incredible. And the reason that the Russian authorities have done that is to try to protect their deposits. They want cash to stay within Russia. They're trying to persuade people that a 20% interest rate is attractive enough to leave your money in the country rather than repatriating it out of the country. Now, it's unlikely that that will work because the geopolitical environment here is more important than interest rates. People are more concerned about retaining their wealth than they are about earning interest on their deposits. Now, if this was in a pure capitalist country, you can imagine the devastating impact that an increase from 9.5 to 20% would have on individuals and companies. Anybody that has any debt in Russia right now has just seen the cost of their debt double overnight. Now that would cause an instant recession in most countries around the globe. Nobody could afford to watch their mortgage repayments double, and no companies would be able to cope with that scale of increase in their cost of borrowing. Now, Russia isn't a country that has large amounts of leverage amongst its corporates, so it shouldn't have that big a devastating impact. But any companies that do have debt and any individuals that have mortgages will now certainly be feeling the pain. And at the same time as that, we've seen the ruble fall 30%. So this is a double whammy. This is an absolute disaster for anybody who has any debt in Russia right now. The other response we've seen from the Russian central bank is they have now instructed all exporters in Russia to hand over 80% of their foreign currency. So this is a measure that we saw recently in Turkey. The Turkish authorities instructed all exporters to hand over 25% of their foreign currency reserves. Now, the reason that this figure is so much higher in Russia than it was in Turkey is that Russia has a lot of natural resources. So in Turkey, we were talking about a lot of the companies had to import goods and raw materials before they could process and manufacture them and then export them. So they couldn't afford to hand over all of their foreign currency because they were using most of it to buy in goods and raw materials. Now in Russia, it's a slightly different situation. Because they're asset rich, a lot of the export goods and raw materials already exist in the country. So foreign currency isn't quite as important in terms of their purchases. But it is very important to these companies overall, because if you're seeing a 30% reduction in the ruble, the last thing that you want to do is be taking payments in rubles or holding large amounts of rubles, because all of your profit could be wiped out just because the currency moves against you. So the central bank want the foreign currency because they need it to keep supporting the ruble, to keep the value up. But none of these companies will really want to hand over any of their rubles because they're taking on a currency that's depreciating in value and could become worthless. We could see a dollarization of Russia, which would be a disastrous outcome for President Putin. He does not want the US dollar becoming a major currency in Russia. So he's trying to support the Russian ruble, but all of the sanctions that have been put in place by the international markets are bringing the value of the ruble down and putting a lot of pressure on the Russian economy. So we've got a real tipping point here, and at some point we may well see a major recession starting to kick off in Russia because they just can't keep the value of the ruble up, and therefore it's going to hurt all of the people who deal in rubles. Another response from the Russian authorities to the sanctions is that they have now instructed all of the brokers in the country to stop any shorting of stocks and markets to try to prevent the downward spiral that will cause on prices. So in the Western world, as soon as any news comes out that will impact on any companies or countries, we see hedge funds shorting either stocks or currencies or a variety of other assets. And they do that because they know the price is likely to fall. But the impact of shorting those stocks and currencies is that it becomes self-fulfilling. It becomes a vicious circle. It drives down that price because everybody then starts selling and nobody wants to buy. So the Russian authorities are trying to prevent their stock market crashing and trying to prevent the ruble crashing. But the problem that we've got here is the international markets are not under the control of the Russian authorities. So the Russian stock market may well try to preserve itself, but any international holders of stocks will want to dispose of those stocks. And that's partly because the stocks are falling in value and partly because of the geopolitical issues. Nobody now wants to be involved with Russian business. So we saw just recently that BP, which holds around about 20% of a large Russian oil business called Rosneft, has now announced that it will be disposing of that stake. And that's likely to continue as long as this conflict goes on. We will see more companies and countries stepping back from having any involvement with Russia. So the authorities in Russia are trying to prevent the stock market from crashing, trying to prevent the currency from crashing, but realistically, they won't be able to do that. They can prevent the brokers from dealing in the trades, but actually all that's doing is building up that demand for sale, and as soon as the markets open again, everything will crash. So what's the summary and conclusion today? Well, clearly the sanctions that have been brought in by all of the Western world are really starting to bite. And we've seen a massive fall in the ruble and a huge hike in interest rates. And the fact that the authorities are asking all of their exporters to hand over 80% of all of their foreign currency shows how desperate the government are. They know that they need foreign currency to try to support the value of the ruble in the international markets, and they don't have access to any of their overseas bank accounts anymore because of the sanctions. So they're now trying to get it from the companies within Russia. Now, that is a short-term view. It won't last, because even if all those companies do hand over all of their foreign currency, once they have used that in the international markets, it will be gone and they won't be able to replenish that source. So that means any support of the ruble will be short-lived, and once the cash runs out, the ruble will fall further. So we're looking at free fall in the Russian economy. The interest rate increase to 20% is an attempt to stop hyperinflation. When we see a situation like this, where a currency is devaluing rapidly, we see increases in prices. We'll also see increases in prices in Russia, driven by the fact that a lot of Western companies no longer want to deal with Russia. So there will be shortages of various goods, and that always pushes prices up. So we're looking at a period in Russia where prices are going to go skyrocketing, where the value of the currency is plummeting, and that's the perfect recipe for hyperinflation. And when we have hyperinflation, it usually leads to the collapse of the currency and a recession within that particular country. So it's very likely that if all of this conflict continues and these sanctions are upheld against Russia for a prolonged period, that we will see a collapse of the Russian economy. Now, President Putin obviously doesn't want that, and he's trying to fight against it. But the problem he has is that the longer he goes on with his aggression against the Ukraine, the harder all of these sanctions will bite, and the more pressure there will be on the Russian economy. Now, unfortunately, the Russian economy does form quite a big part of the global economy these days. Russia is a massive exporter of fuel. It's a big producer of oil and coal and natural gas. And all of that fuel is essential to keep countries like Turkey and Germany and Italy and China fed, and to keep their electricity running. So we can't look at this just in isolation. There's no pleasure that you can take from Russia becoming bankrupt, because it will have a knock-on impact to the rest of the world, and it will cause a global recession. Russia is also a big importer of a lot of goods and services. It's around about $300 billion worth of imports every single year. So if we see that market collapse, that will be a 300 billion black hole in the global economy. So all of those companies that sell things into Russia will lose those sales, and therefore there'll be the ripple effect of all of that those companies will contract. Some of them might make losses. They might have to make their staff redundant, and so it goes on. So you can see the interconnectivity between Russia and the rest of the world. So Russia is currently in a world of pain, and that's likely to continue financially. And the longer that goes on, the more likely it is we'll see Russian economy collapse, and more likely it will be that that will cause a global financial crisis. So I'll keep you posted on any further news and developments as and when they happen, but I wanted to post this shorter video than normal just to get you up to speed on what's going on right now in the Russian economy and the likely implications for the global economy. So if you've liked what I've said today, please give me a thumbs up, and don't forget to subscribe if you haven't done so already.